Good evening, everyone. Welcome to our March AMA. Tonight, we're privileged to have Mat Merlahan from Tax on Chain joining us. G'day, Matt.
G'day, Matt. How are you?
Good to see you here. And we've survived the turmoil of Cyclone Alfred last weekend, which is why this had to be postponed. But it's good to be here. And thank you to everyone who's joining in person and also on the YouTube catch-up later on. I hope you can see my slides on the screen. Matt, you can see the slides nice and clear.
I can definitely see them.
Thank you to our sponsors. We have quite a few sponsors. I work with nearly all of these, and really thrilled to have such a good support base here with Australian and also some multinational companies that are getting behind all things blockchain and what we do. So we're very grateful. Tax on Chain, you'll see listed there. We ran an event last year, an in-person event with Tax on Chain, and they're back again as a sponsor this year. So we're really grateful to Raf, Ollie, and Matt, and the whole team, Will, and all the team there at Tax on Chain. ATB, we partner with other organisations as well, notably in this setting, Oz CryptoCon and also Women in Digital Economy. Wave of Innovation is around as well. They've got an event coming up at the end of next week, actually. That's the Friday week, late in March. None of that, what we do at All Things Blockchain would happen without our team. There's a team, an army, a small army working behind the scenes to administer and organize the events that we put on. We're always giving thanks to our team members there. Coming up, we have our next in-person event. It's going to be on the 1st of April. It's about 2 weeks away. And it's going to be with Virgo Exchange. Virgo is an interesting story. They are a Canadian-based exchange that are growing their presence in Australia. And they are launching, that we're now at liberty to say, a DeFi wallet, I assume, to compete with the likes of Crypto.com and others. So that's going to be very interesting. They're touting that as a different way of looking at your crypto rather than having it on the centralized exchange. So it can be a really interesting look. Viola is going to be with us. She's the Australian marketing manager for Virgo, and also Peter Ip is flying down. He's the head of retail at Virgo Global, I believe, coming all the way from Singapore to join us in person. So really looking forward to that one in a couple of weeks' time. Our community hub, you can sign up to that on the QR code there. We host a monthly newsletter that goes out on paragraph.xyz. The newsletter seeks to highlight not only events in Brisbane and around the southeastern seaboard of Australia, but also worldwide. We bring information and try to highlight what we think are good community style events going on right around the world. So keep an eye out for that one. We're always keen for you to follow us on our socials and support us there. We're in all the usual places. You'll find us on LinkedIn, Facebook, Instagram, all the usual places, X, you name it, we're pretty much there. And really, I think that's just about my initial blurb. Mat Merlahan. Matt, we met at Aussie Crypto Roadshow at the Hilton in Brisbane about nearly 3 years ago now. And I remember you talking that day, I believe you were talking on, well, I was certainly talking on DeFi, and I think you might have been talking on DeFi aspects as well. So what's the quick primer on Mat Merlahan, and how does a DeFi and an ETH maxi come to be a CPA?
I think you have to be a CPA before you come into the crypto space. But yeah, I've been in the accounting space for a long time now. I've been actively in public practice for about 11 years. And the most recent 2 years, I've been full-time working with the team at Tax on Chain. So yeah, my journey began as most accountants do. They'll go to university, QUT represent, and did my CPA professional qualification. Pretty much did everything that I think a lot of Brisbaneites would in the accounting space would say is a little different, because yeah, I think most of them usually go to UQ and then get their accreditation from CA, ANZ. But yeah, kind of went the other way, thinking I might end up in the corporate space, but yeah, really enjoyed the public practice and kept at it. I've mainly been with a lot of small business public practices, nothing any bigger than 20 people. Really, that's just a personal preference. I didn't really see the culture early on in these big four accounting firms being that great, in my opinion. So I stayed away from a lot of that. And then I think when I moved to the previous employer before coming to Tax on Chain, I sort of stumbled across crypto just from some of the guys in the office talking about it and saying, yeah, the boat's moving off without you, Matt. You better buy some of this crypto. And I said, okay, how do I get in? And they just pointed me to an exchange. I won't name it in case it's a unpaid plug there, but
Yeah.
I fell in love with the number go up pumpamentals to start with. Then number went down, and I decided I should either sell or figure out what on earth I actually put my money into. So I decided on the latter, and since then I've never really left the crypto space. I've continued to be a scholar of the space, always trying to learn what's going on, what things are sort of trending. Very fundamental level. I tried my hand at trading, but I didn't really have the I think the time to be able to put to it properly. Having a full-time job, and not long after that, I also had young family. So
and I think the mental headspace, you've got to be in the right mental place for trading, especially
absolutely,
short term.
Yeah, absolutely. So I mean, wouldn't mind giving it a crack if one day I had a bit of spare time and no financial issues. I don't think I'd want to risk more than I could afford to lose. So yeah, definitely not in that position just yet. I think a lot of people would think that I've been in the space since 2017 and I should probably be rich by now, but like many people, I also made mistakes along the way. I didn't get completely blown up, but there were a couple of bad trades, I would say. So
it's
yeah.
often that question you get asked, isn't it, by a noob who's expects you to be rich just because you're in crypto. Well, it's not quite that simple.
No, and people start to ask you questions as well, as I always are at a lot of conferences and events. People are like, "How on earth did you make it through this? Like, where did you go to learn everything?" And I mean, around that time, there weren't really a whole lot of resources. It was effing around and finding out. It was trying to tune into certain YouTube channels, and before that, and even just trying to navigate Twitter to try and find the right people
Yes.
to be following. So, and that for the most part, that hasn't really changed for me. I know there's a lot of good resources out there, but for me, I still prefer to try and read. You get a bit of a vibe on crypto Twitter as to what's going on, and sometimes that can be a good countermeasure. If everyone's bullish, then maybe be cautious, and if people are bullish, then it might be a good time to buy the dip.
Yeah.
But I do also have to remember that the age old meme of buying the dip and buying the dip of the dip and the dip of the dippity dip dip. Just because it goes down doesn't mean it's going to go back up. So yeah,
Yeah,
many ways to get blown up.
we might circle back to that DeFi story later in the thing, but to come back to the mainstream, I know from chatting to you and the team there at Tax on Chain that SMSFs are very popular options, or a lot of questions are coming from your customers about how much of my SMSF can I actually allocate in Bitcoin. Do you want to tell us what you're seeing there? No financial advice shall be given tonight.
Yep, absolutely. No tax advice. It'll all be general in nature as well. And yeah, we're not accredited financial advisors, so therefore nothing should be construed as financial advice or legal. We have people we can put you in touch with if you do have more questions in those particular areas. But yeah, everything we say on this AMA will definitely be general in nature. Maybe a bit of life advice, but even then, take that with a grain of salt because it doesn't work for everyone. But yeah, so I guess circling back a little bit to my move over to the firm before Tax on Chain, I started finding a bit of interest in investing generally, but also investing through superannuation, and self-managed super funds came up because it was an interest. I became pretty adept at it early on after being exposed to that particular niche of the accounting industry. So honed my craft over the probably 5 years that I had really been involved in that space. Got to previous firm, kind of headed that up a little bit, became quite knowledgeable in that space. And when I came onto Tax on Chain, the guys said that they have some knowledge. They would probably prefer to hand it over to someone who's got more of an understanding of that space than they do. And because we had a lot of people that were inquiring generally and not enough people looking after the SMSF space, we've sort of decided internally to focus our interest in certain parts of that business. So so that a large majority of the team look after anyone that looks after that needs their crypto reports or tax returns handled. I and one of the other guys in the team, Sam, he and I look after a majority of our SMSF clients, which since starting a Tax on Chain almost 2 years ago has increased 10x, which is also quite incredible. As a trend, just internally, it's interesting to see that there has been such an increase in the adoption of SMSFs, and I think a lot of people will probably find it a little surprising, but also not too surprising that a large majority of the SMSFs that we look after are 100%, if not a large majority, invested in crypto assets. And to your point, Matt, a lot of people were asking exactly those questions. Can I actually invest into these kind of assets or asset classes through a self-managed super fund? And when they find out that they can, we'll tell them what the rules are and what you need to be considering when you do go into that space. But people are blown away that they're able to do something like that.
There are obligations there on you that are different from, say, a different type of managed fund. You know, there are sort of obligations on you almost as I don't know if the word's a director, but you are personally quite responsible, aren't you, in terms of making decisions?
Absolutely. The role that you take on when you set up a self-managed super fund is both you wear two hats effectively. You're the member of the super fund, the one that has the money that is being invested for your retirement. And you're also wearing the hat of a trustee, whether that's yourself individually or as a director of a company that you set up purely for the purpose of trusteeship for that SMSF. So you're very, very actively involved. And the way that our business is set up is that you're managing absolutely everything, and we're looking after the administration at the end of each financial year. We can help you with some of the document collation for applying for certain bank accounts. But yeah, I think a lot of people do forget that they have full control over absolutely everything. And with great power, with great control, comes great responsibility. So making sure that you know what the rules are so that you can abide by them is going to be crucial. And that ends up for a large part coming down to people doing their own research at the start, but then also making sure that they lean on us as their trusted advisor for these ventures, especially in that first year when you may still be learning. Once you've got a year under your belt, a lot of the time
once you've gone through the reporting once, yeah.
Absolutely.
Hey, I don't know if you've got an answer for this, but Nuwan has asked, which third-party multi-sig options are there for Bitcoin and crypto custody for SMSFs or for other legal entities do you guys recommend? Are you, I don't know if you're able to recommend, but are you seeing, a prevalence of certain tools that are helpful in this space with which, I guess the super providers, can also interoperate or?
Yeah, absolutely. So in terms of multi-sig wallets and just security of assets generally in an SMSF, the option you go to may not always be the most secure, as kind of crazy as that sounds. It's going to be reliant on your budget. You could have everything sitting on a hardware wallet like a Ledger or Trezor, and that may cost you $150, and that's totally fine. if you're looking for something a bit more secure, I mean, some people will have multiple backups on multiple hardware wallets. They might keep one at home and put another one in a safety deposit box. So that's an option as well.
Yep.
When it comes down to multi-sig wallets, there's, I guess, the biggest consideration is going to be cost. There are some solutions out there like, look, I don't have any affiliation with them, but in terms of Bitcoin, Unchained Capital do have a service where they will set you up with a Caravan wallet. So Caravan wallet is an open source multi-sig Bitcoin wallet solution. And from what I've been told, I personally don't have one, but people that have set up with those, they are pretty good. You could also use, and I guess in that setup, you're either getting them to set up the construct of that multi-sig wallet for you for a service fee, or they're accredited to offer the service of, if you had, say, 2 people, they could be the third signatory so that you've got a backup if you lose one of those keys to access that wallet. There's another financial advisor locally that offers a similar service. If people are interested, I'm happy to point people to this particular person, but in case it's considered I mean, I don't have any affiliation with this person either, but I know that they are a financial advisor and that they offer crypto specific financial advisory services, mainly to do with Bitcoin. Whether he offers advice in other blockchains or not is a different question. Not 100% sure on that.
Yeah.
When it comes to anything outside of crypto, I know on the EVM side of things in Ethereum and any other EVM equivalent blockchain, there's a number of options there. And I think a lot of people are sort of leaning towards Safe, or what used to be called Gnosis Safe. It seems to have the most Lindy effect. It's been around the longest. It's got the most battle hardened open source code. So I think a lot of people do lean towards that, but that is very much self-serve. If you know how to set it up, awesome. If you don't, then it does make it difficult.
Yes.
And because, again, crypto custody is considered a financial product, so we can't even dabble in that space either, which makes it even more difficult.
Yeah, so maybe that leads to Nuan's follow-up question there, whether the ATO's got any prescriptive rules about how to custody this stuff. I imagine not.
The main thing to keep in mind with custodying assets like gold and crypto, so like gold, you can custody your crypto assets for an SMSF at home. The biggest thing to keep in mind when doing that is I'll spit out the legal reference later, but the requirement is that you keep all SMSF assets completely separate from personal assets. Not doing that will breach one of these regulations. So it's Superannuation Industry Supervision Regulations 1994, Regulation 4.09A, and that basically prescribes the requirement to keep those assets completely separate. And I guess it's worth flagging that that's one of the most common breaches that we have come across recently. A lot of people will send assets from their SMSF bank account to, say, a personal bank account, or to a personal crypto exchange, or even to a personal crypto wallet. In that situation, as soon as that leaves your wallet and hits the account of the personal wallet or exchange, breach of that regulation.
Okay.
So yeah, it is important to make sure that you're doing things purposefully when you do start interacting with your SMSF, because like I said before, there are a number of ways that you can get yourself into hot water, which then makes sure, like, it sort of reiterates the fact that reaching out to us is probably the most important thing you can do. Like, we tend not to charge people for 5-minute conversations where they just want to run something past us. but it's going to be a lot more expensive when we find that issue, then have to report it at year end.
Well,
And
that's right. And
that's
if
when,
you get audited retrospectively, yeah, it's going to be much worse.
yeah, it just leaves a sour taste in people's mouths when they deal with us. They kind of think that we were supposed to tell them these things, and I guess there's a lot of things to be mindful of with a super fund. So I guess making sure that you are doing your research, or at least asking the right questions when you do reach out to an accountant such as ourselves. That's going to be the most important thing that you can do.
I think, Matt, that moment when you are getting it back to your personal bank account is also worth discussing, because I know we've had chats at various meetups with other tax partners with whom I've worked about those being CGT events potentially, right? So I'm assuming, ignorant question maybe, but that the moment that that's coming back into my sort of traditional fiat banking account in my personal banking world, whatever's happened there to the value of that is a CGT moment. Is that correct? Would that be correct?
Are we talking assets moving from
Yeah.
SMSF
Yes.
to personal?
Yeah.
So I guess if anything is sitting outside of that realm, I guess fiat is fine. As soon as there's assets, look, circumstantial on at a very high level, very commonly a yes.
Mm.
Sometimes what we can do is say to people, if you've sent, say, one Bitcoin to the wrong wallet, you've sent it to a personal wallet instead of an SMSF wallet, send it straight back, incur the cost personally of transferring that.
Mm.
And we would just
Don't
say,
claim that.
to the ATO, look, this was an error. It's been rectified. I guess the biggest problem is that's a common sense approach. But if you were to talk to anyone in the legal space, some people may say, "Oh, that's you selling something to yourself personally and you transferring it back. So here's another fun trap for you. Transferring assets from a personal wallet into an SMSF wallet or exchange account could be deemed as you acquiring that asset from yourself personally, or specifically from the trustee of the SMSF, which breach of the SIS Act 1993, Section 66, which, believe it or not, results potentially, if breached, in jail.
Oh, wow.
So when you're in jail and people are saying, "Oh yeah, I was in here for murder, or I'm in for manslaughter. What are you in here for?" And you
Accidentally
tell
moving a
them,
bit of crypto
"Oh,
back. Crypto back. Yeah.
oh, I breached SIS Act Section 66." You're gonna be a baller, that's for sure.
You'll be the nerd at the dinner table, that's for sure.
Absolutely.
So much knowledge, and do keep the questions coming, folks. If you've got any more questions, where do we go from here? Tax guidance, preparing for tax year end.
Yeah. I mean, for the most part, we're still a while away from end of financial year, but this is probably the best time to start thinking about it, in my opinion. And I guess a bit of a shameless plug here. The intention for us at Tax on Chain is to start reaching out to all of our clients to start doing exactly that, communicating with them that there may be some opportunities to optimize your tax for the 2025 financial year. The best time to do that is before 30 June actually concludes. You've got infinite, I won't say infinite, but seemingly infinite options available to you before 30 June. As soon as it ticks over to 1 July, those options become increasingly limited. So I guess a large theme, or if anyone in the chat does have questions around how they may want to optimize their tax ahead of the 2025 financial year's conclusion, feel free to send it in. I think the biggest thing that has been a bit of a theme, it's something I covered in my presentation at Oz CryptoCon last year, back in November, was around these tax optimization strategies. And that can range from tax loss harvesting, that's a very common thing that a lot of people talk about, all the way through to restructuring how you hold your crypto. I think a lot of people may still just hold crypto in their personal name, where it may be it may make more sense for it to be sitting in a trust or a company structure, where there is a bit more flexibility in terms of how that is going to be taxed. So completely up to you, Matt. I could go into some of those details there. And we could also talk about some of the really fun stuff. Just depends on people's appetite for that kind of content. We can we can go as deep as we want to, but yeah, I know a lot of people, it may not be suitable for everyone. And that's kind of where we step in as accountants and tax agents. So at the very least, we can keep it pretty basic. And if anyone has more detailed questions or something that they may think is helpful, that may be a bit more complex, they at least know that they can reach out to us to discuss it in further detail.
Yeah, what are your thoughts? We were chatting offline before we hit the record button about where I guess the authorities generally are at, and particularly in your world, the ATO, in terms of not only understanding this technology but being able to articulate effectively in words, what the parameters are. We hear quite a bit of frustration around this. What do they call it? Web guidance, or this online guidance that's issued that sometimes, for the ATO's perhaps best intentions, is not very detailed, or it's not very prescriptive to follow, or it's not easy to follow. And that CGT moment, the example that does my head in, as we talked about once before, is that even at one stage there, they were trying to say that moving from wrapped ETH to ETH is potentially a CGT event, and from a technology standpoint, we're essentially talking the same asset. So, and if you've got any comments generally on where we think the authorities, and it doesn't have to be ATO, but also ASIC. I know you were at the one of the policy, on at least participating online in one of the policy week sessions last week.
Yeah, I would probably defer to our good friend Harrison Bell and his description of web-based guidance. For those that haven't heard that description,
Safe for on air, is it?
Yeah, absolutely. He basically referred to this guidance as toilet paper. He sees no real value in it other than a bit of hand wavy sort of virtue signaling. It doesn't bind them to that guidance. Website information is not binding to the ATO, which means they can change it at the drop of a hat. And we very frequently find that they may communicate a change log of things that they've done to the website, and that's how a lot of people tend to find out, unless the ATO go and communicate that with certain powers that be. But a lot of the time, we find out when everyone else finds out, which is frustrating. So a lot of that stuff that is on the ATO website, for the more bespoke crypto specific concepts, a lot of it tends to be just their interpretation. I mean, we thankfully have a lot of things that fit into certain buckets. If you're trading one asset for another asset, there is very clear guidance in the Income Tax Assessment Act. Both of them, in fact. Fun fact, we have two assessment acts. So it is very clear that selling an asset and buying another one, there are two separate CGT events there. I think that is a common misconception for some people. It's one that we still hear frequently, even to this day, that if it doesn't get converted back to Australian dollars, or if it doesn't move into my bank account from my exchange account, that it's not taxable. Couldn't be further from the truth. But
the way things stand,
it doesn't matter if it's on an exchange or on a wallet. If you've traded one asset for another, whether that's Australian dollars or another crypto asset, you've got a CGT event there. So we can at least hang our hat on that, and there's substantial amount of guidance that sort of details that. Where it starts to become fuzzy is when we start talking about these crypto native concepts. Like you said, wrapping an asset, really the function that serves is getting an asset into a format that is compliant with with that blockchain. Ethereum was not built to be ERC20 compliant when the blockchain was first launched, and DeFi wasn't even considered as something at that time. So when people started creating a lot of these DeFi protocols, they needed to use ETH as collateral, or the consensus was using ETH as collateral. But those smart contracts didn't have a way to use ETH because it wasn't ERC20 compliant. So
hence the, yep.
So wrapping it, and even wrapping Bitcoin, for example, to move it onto a blockchain where you can use it in DeFi
Context,
platforms. Yep. Like, for us, we see that and just think it's just a new layer of coat on a property. If I was to use that analogy, like, really, it looks different, but its function is effectively the same thing.
Yeah.
The ATO, on the other hand, seem to think that that is a substantially different asset, and therefore you have a CGT event where you've sold ETH and purchased wrapped ETH as an example, and any gain or loss on that event needs to be calculated and reported in your tax return. Absolute garbage. And the same could be argued for bridging assets between blockchains, especially between EVM compatible blockchains,
let
going
alone
from
mixes and whatever else.
Oh yeah, absolutely. I mean, even if you did use something like Tornado Cash or Railgun or Veil, like, all you're doing is putting it into a platform that allows you to anonymize your assets. You still functionally, at the end of the day, have the same asset. It's just been put through a number of ringers to make sure that it has been anonymized to serve that particular purpose. But the ATO, again, takes that same concept for wrapping and unwrapping and says, no, this is fundamentally, or it's substantially different to what it originally was. Therefore, you have a new asset, and therefore CGT event has been raised. Capital gain needs to be calculated and reported in your tax return.
It will be interesting to see if that gets wound back, or if that is maybe better defined one day down the track. But it's something that I do like to point out in all these general taxation conversations about crypto that I have. So
yeah, absolutely. And that's the, and I guess, going back to what we were saying before, that is the ATO's interpretation of the rules. They haven't put pen to paper and made it binding. So I think as we speak right now, and I've used this analogy quite a bit as well, some of these DeFi or Web3 native concepts that we're using here, they are very much a square peg being pushed through a round hole. They don't fit the current legislative framework. Changes need to be made so that they can fit into it. And the ATO just doesn't want to play ball, or they just don't know how to approach it, despite many industry players throwing their weight behind this to try and make something cohesive. The ATO still doesn't want to do anything. And even, like you said, we were like a bunch of us were part of a crypto policy summit last week. It was a week-long series of meetings and roundtables with industry leaders and government organizations. One of which that I was a part of was for ASIC's Info 225 document, which sets out a bunch of different guidelines and examples as to where they see the current legislative framework around the Corporations Act intersecting with the crypto space. And a lot of the examples they were giving either lacked crucial details or were just fundamentally incorrect. So part of the discussion we were having, and big props to Joni and everyone that's involved in that effort, because they did an unreal job.
Joni Perovich from Melbourne.
Yeah, from Bedazzle. Big shout out to her. She's done a great job. So I think what we're doing is trying to educate government bodies that are making these key decisions to make sure that like we have good regulatory frameworks in place so that everyone knows the rules of the game, that the rules of the game are fair, and that it's considered every single potential edge case that we can think of, or at least the most common scenarios in crypto. There's always going to be edge cases, and you can't account for absolutely everything, but the government could do a much better job. And I think having these kind of policy weeks signals to them that we want to be a part of that. We're not trying to evade paying tax or evade financial services regulations. We're here to help, and
Yes.
they just need to take us up on the offer.
Yeah, no, they are, and they are at the table. I mean, there's a lot of work being done by Digital Economy Council of Australia, and also Blockchain APAC, as you mentioned, which a whole week of activities last week. Hey, Christopher Schaffer is a friend of mine. He's a barrister. I don't know if you've met Christopher, but he's come up with a question. He's saying, has anyone had any success, or what is the Commissioner's approach in using the remedial powers in this space? Christopher is a barrister, so.
Yeah, I would say if he's looking at that section, he's probably best placed to talk to Harrison Dell, maybe also Damien Lloyd.
Yes, I've introed him
Yeah,
to Damien.
definitely outside of my scope of knowledge, but yeah, I know there's a lot of people that would be able to answer that question. Yeah,
Christopher,
Harrison,
if you've got a
Damien, Jody.
follow-up, do jump in with a follow-up or a supplementary there, Christopher, if there's another angle which you think Matt might be able to answer it. Matt's a CPA and has a really deep knowledge of all things, especially Ethereum-based DeFi. And I want to talk about tools briefly. Interesting point, just out of ignorance for myself. Like, I guess, is it a dumb question to ask whether we can point? I guess we can. The same tax reporting tools that are provided by some of those familiar brands to our SMSF holdings. I suppose we can. They're all just wallets at the end of the day. Is that right? And what sort of tools are you? I'm not asking for recommendations, but what are you sort of expecting? As best practice or best outputs from your customers come tax time?
A lot of the time, we will use whatever is going to get us the best, the most complete, and the most accurate information as possible. A lot of that will involve having direct integrations with these blockchains and crypto exchange accounts, both locally and overseas. We're finding two software solutions seem to be the front runners for us for what we need it to be achieving for us, and that is usually Crypto Tax Calculator and Coinly. If we were to lean more towards one, it'd probably be Crypto Tax Calculator at the moment. Their integrations, the user interface, the way that they allow us to reconcile activity is definitely a lot more user friendly, at least to us. And we work pretty closely with them. We don't have any kind of paid collaboration per se, but we definitely find that we're working with them quite a bit to try and improve that product. Crypto moves at the speed of light at the moment,
Yes.
so it is very difficult to keep up. But I would say on the whole, they do a pretty good job of offering something that is of value. I guess one thing that might be worth flagging is if you're in a structure like an SMSF, or if you're at a position where you need to report the market value of absolutely everything, I guess one drawback at the moment for both software solutions is valuing non-fungible tokens or NFTs and liquidity provision tokens, LP tokens. Now, in saying that, our workaround for those is partly doing the work ourselves. We'll manually go onto an NFT collection secondary marketplace like Blur or OpenSea, Magic Eden, these places where these assets are being traded. We'll find the last traded price at 30 June of each financial year for that collection, and value that way. Easier said than done.
Yes, I was going to say my mind's boggling a bit, but yeah, it's also a point in time because that price could have fluctuated wildly in the
It
preceding 12
is,
months or during the period
yeah.
during which that asset was held.
We do have the benefit of all of this being on a blockchain, so it's never going away. It's more just passing the information to get to the answer that we need.
Mm.
Sometimes those user interfaces on these marketplaces only go back so far, which understandable. The hope is that people just don't invest in NFTs generally in their SMSF because there is a bit of a gray area at the moment with NFTs being interpreted as a personal use asset or collectible, which in an SMSF setting has some strict rules around it. And for a large part, we say to people, just keep it out for simplicity. So we don't have too many people that do it, but the ones that do, it's usually they've done it without sort of inquiring to us first to see if it's okay, or they've sort of FOMOed into something. It's gone to zero, and now they're just left with a meme coin with a picture. So then it's a matter of tidying all of that up and harvesting losses, sending it to a burn address or to something like NFT Loss Harvest Store, one of these services that will buy the NFT off you. And then in terms of LP positions, a lot of the time we would do the exact same thing. We would use something like previously we've used on-chain data on the like on Ethereum and a lot of EVM blockchains. There are token balance and account balance checkers that you can use. Find out the contract address, find out the contract addresses of the tokens that are within that LP, and find out at that point in time at 30 June of whatever financial year we're looking at, how many assets were in that pool, what's the market value of each of those tokens. Bang, there's the market value of the LP position, and you solve for X after that. Now, DBank, an on-chain information platform, they have a pretty good solution. It's called the Time Machine, and for some of these particular clients that have LP positions that may not be easy to pass apart, we will just use that solution. It is a paid subscription, so we'll only use it when we absolutely have to, but it is not a bad tool to have in your toolkit, if that is something you need to do.
Speaking of NFTs, I'm going to make perhaps an awkward segue, but tell us just to lighten the moment a bit about your involvement with the Pudgy Penguins project. It's probably worth for those who maybe aren't aware, either now or watching the YouTube, what Pudgy Penguins is, because it's basically a unique digital, so it's like a digital physical crossover, right? In terms of the merch that they bring to the table.
Yes, absolutely. I'm actually just looking around the room next to me
No
just to see if I've got some merch, but no, not this time. It is exactly that. It was one of the earlier NFT collections going around. I think most people will know that one of the first NFTs going around was CryptoKitties, the NFT collection that clogged the Ethereum blockchain back in 2017, and what people argue is the reason that number went down after 2017. But after that, there was a collection that was a free mint called CryptoPunks that has become quite an important part of Ethereum's culture. Not long after that, there was a collection that was put out for sale, the Bored Ape Yacht Club. That seems to be when things started to pick up quite a bit. I felt like I had missed both of those boats, and then decided, all right, what's the next thing I could get into? Very low IQ play at the time. At the time, that was Pudgy Penguins. I kind of thought, again, very low IQ here, but I thought that they looked cute. They looked like something that I would happily show to my daughter, who at the time would have been 3 or 4. And she said, all right, I even just let her pick one. She said, yep, let's go with that one. It's pink, it's cute, it's it's winking its eye. Yeah, buy that one, Dad. And sure enough, I just bought it, didn't do anything with it, sort of kept on keeping on with that investment. It went down, continued to hold, and yeah, thankfully it's gone back up now. But recently, Pudgy Penguins has started to branch out into a lot of other countries and started to build a bit of a community. I've stumbled into that Telegram group and starting to get a little involved there to help organize some of the events. Mainly the one that we've been trying to do. We're on take 3 now for the Brisbane event, but we will eventually get to that event. So if anyone wants to go to that, I'll leave out as well. But yeah, planning take 3 in the next month or so. So yeah, keep your eyes peeled for that one.
Yeah, so and speaking of that, where do people find you? Is it Merlo_ETH on X?
Yeah, on Twitter, there's, or yeah, now known as X. I'm a boomer at Merlo_ETH. If anyone wants to reach out to me, we've got some pretty good profiles of all of us at the team at Tax on Chain on our website, taxonchain.io. And there's a couple of links to our social profiles there as well. So yeah, if you want to get amongst it with all of us there as well, by all means, feel free to reach out to us from there. On our website as well, you can also book in a time to have a chat with us. I am not available at the moment for most general chats. Raf, Oliver, and Will probably be your best bets at the moment. If it's just crypto generically speaking, if it's anything SMSF related, you'll probably chat to me. But yeah, feel free to jump onto our website. We've got some information on there, both on LinkedIn and on our website generally, some blogs that might help you to navigate the space of taxation for your crypto. And yeah, feel free to be social with us as well. Feel free to jump on and interact with us online as well.
No, the team are all very active. And I was going to ask, that was going to be one of my sort of prepared wrap-up questions, but anything you can share on the vision for Tax on Chain going forward? I assume it's all about growth and expansion. I know you've added a couple of extra headcount even in the last 12 months. I mean, that's a sign that the demand is there. And interestingly, I'll throw into that, when I talk to people who are coming into Web3 or just starting to find out a little bit more about it, they're surprised often that the amount of crypto tax expertise we have, A, in Australia, but B, concentrated right here in Southeast Queensland. So it's quite amazing. And what we've just had a small insight into your brain and its holdings tonight, but it's just an insight that, into what an incredible space this is. But yeah, any final thoughts on where Tax on Chain's headed?
Most of the focus that we've got at the moment, I mean, on my side, it's continuing to grow the SMSF client list and continuing to educate people as best as I can, trying to reach an audience as broad as I possibly can, including coming on to AMAs and other calls with all things blockchain, especially. It also, I think in the next 6 to 12 months, you'll see a bit more of a push to businesses.
Yeah, B2B play. Yep.
Yeah, the B2B play. We've been able to service the retail client really well. We've been able to service some high net wealth individuals just with their passive investments. We really want to push more and sort of demonstrate our expertise in the business side of things. So if you're a business in the crypto space and you're looking to either set up or grow, or you're just looking for someone that has a bit more of an understanding of what you're doing, especially if you use crypto payment rails, or if you just interact on chain as part of operating your business. We want to be that team that people think of and reach out to help out with their annual compliance requirements. That I think is symbolic of the logo and the rebrand that is underway at the moment. The website still has the old branding, but the plan will be that shortly that there's a full rebrand. We've sort of shown our new logo around events. We've got the merch. Yeah, we've got the merch here as well. I would turn around and show you the back, but that might be a bit of a challenge. But yeah, we're really pushing that B2B play now, while maintaining our current offering of structuring, tax planning, and just annual tax compliance. We can do crypto reports as well, if people are happy with their current accountant, and especially if they sort of continue to operate a traditional business. We're definitely passionate about the crypto space, and I think, like any passion, it's best that if you have needs outside of crypto, that you stay with people that are still passionate about that. Your tax accountant around the corner that is really good at providing you with advice for your business is going to be a lot better than coming to someone who's just got their specialty in crypto. We've all been in the public practice for a long time, and a lot of us cut our teeth on small and medium business, but our passion is crypto. So we want to be a part of the investor, the business, the Web3 native business, and the people that want to set themselves up for retirement using crypto as one of their options.
Hey, Matt, there's one more question, and maybe it's worth going back over, just if you can keep it to maybe 2 minutes, your answer. But just going back to what we were talking about there, to that capital gains moment, just to confirm, Luke asks, as the law currently stands, if someone sells their crypto, it is still treated as an asset and therefore subject to capital gains implications.
Correct. In so few words, it's still subject to a CGT event. So the most common event that happens, CGT event A1, is whenever you dispose of an asset. And that's defined by the point in time where that asset is no longer under your control. So if you, for example, have, even in a simple situation where you might have one Bitcoin on an exchange, you decide that you're going to sell that back to even a stable coin, a US dollar denominated stable coin. What you've got there is a disposal of Bitcoin and a purchase simultaneously of a brand new asset. So you'll have a CGT event where you have to report sales proceeds of that Bitcoin. You'll then find its original cost base and calculate the capital gain or loss on that trade. You'll then also have a brand new asset that will have the same value as the Bitcoin that you sold. And from there, and I guess this is all easy as a single transaction, but it is also worth remembering that a lot of people will do multiple trades, sometimes daily, let alone over a financial year. So I guess the other thing that is probably important to leave people with as a tidbit of knowledge is the most important thing you can do to optimize for your tax is to understand where you're at. The only way you can do that is by having all of your records up to date and and even just having them accurately reconciled, whether that means coming to us or whether it's something that you feel capable of self-serving. That is the most important thing you could possibly do. It's going to make sure that you know exactly where you stand. And then if you need to reach out to us to ask for help on optimizing your tax position, we have a clean set of records that we can cast our eye over, and we can very quickly and efficiently tell you, all right, this is one of your many answers. Then it's up to you to execute. If we have to go and reconcile that information ourselves, could take a while. We may not be able to get it done in time. That could mean an unfavorable tax outcome for yourself.
And Matt, it's probably also worth mentioning, my understanding is in the Australian setting that if we were to say use some Bitcoin to buy coffee at one of the crypto cafes here in Brisbane, that's also treated as a disposal event, correct?
It's treated as a disposal event. And I guess this is where some of the nuance comes into play. A lot of the time, if you're using assets purely just to buy a coffee, for example, there is a provision that allows you to ignore having to keep records for things like that, provided it's what we call a personal use asset, similar to NFTs. But if the sole function, if you, for example, had, say, $50 that you loaded onto a Bitcoin wallet and just traded for at that point in time, and your intention was to use that throughout the week to buy coffee, then there really is a domestic kind of purpose for that. You're not looking to make a profit. You just like the idea of buying Bitcoin and using that
So
to buy
this
your
is the
coffee.
investor definition versus the hobbyist, basically. Yep.
Very much so. And it's very hard to argue a position these days as saying that you're a hobbyist in the crypto space, because so many people have realized that there is money to be made. But I mean, back in the day when people were mucking around with Bitcoin miners, it was very much a hobby. And some people did successfully argue that case, that they were a hobbyist at the time and that any profits they made are not taxable.
It's been a while since I've read up on this, but the part of the definition was the frequency or number of trades as well, wasn't it? I forget what the number was, but some reason I have 10,000 in my mind, but there was a lot of transactions.
And if it costs less than $10,000, so if the asset that you're looking at selling or using for personal use,
that's right.
The minimum that they'll allow you to use is 10,000. So that example of buying a coffee, totally fine. Maybe not so much if you were using it to buy a Lambo or your next house, your next mansion that's going to be set up next to Kane Warwick.
That will raise some flags.
Yeah.
Well, on that,
having said all of that, I mean, if you've just purchased it for, I was going to say that's probably the best way to wrap up, I think.
That's good. Win Lambo. All right, Mat Merlahan from Tax on Chain. It's been an absolute pleasure. I hope everyone's enjoyed that, and those who are watching this back on YouTube. This has been ATB's AMA with Tax on Chain for March 2025. Thank you and good night.